Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you a video based on what I wanted to do was I wanted to live record the Fed announcement. I'm sitting here 3 minutes before the official announcement of monetary policy out of the FOMC, Free Open Market Committee. It's one of the most widely anticipated events every 6 weeks that the Fed meets to discuss what they're going to be doing with the interest rates, quantitative easing, their views on the economy, inflation, in everything that the Fed does. And the Fed has really kind of two mandates. One is to maintain price stability from an inflationary perspective, and the second is labor. We want a full labor force. And just recently, just in the past few months, you've had Japan go to a negative interest rate. Just last week, you had the Eurozone go into a negative interest rate, even further into negative interest rate territory, including going into further into quantitative easing. And if you look at kind of last week, this was their announcement from last week. And initially, you saw this huge movement to the downside by about 100 pips when they made the initial announcement of negative interest, as well as a from 60 billion up to 80 billion in quantitative easing. And then Mario Draghi gave a speech after that, as is routine, gave a speech after that, and all of a sudden he said that they had probably went as far as they could go from a monetary policy perspective, and that shot it right back up. And as you can see, you just have so much major announcements that can have an impact on price. And now we're kind of looking at in terms of what's happening right now in the market. We have 2 minutes before the announcement, and right now the S&P 500 down about 5 points on the day so far. And this is really kind of normal, this price action right here. Right before the announcement of the Fed, the market's really not going to do anything. It's just kind of hang on right there. Nobody wants to get in front of the market. Nobody wants to sell the market or buy the market. They're really just going to wait on the Fed. Now, based on the projections of the Fed, this is going to be kind of a snoozer, but you never know. You really never know when it comes to the Fed. But if you look at the CME, which is the Chicago Mercantile Exchange, they have a 97% probability of the Fed standing pat at 0.5% interest. You have about Bloomberg did a poll of about 98 economists out there, and they widely expected them to stand pat as well. So in terms of like the probability here, it's not even registered. It is more than likely going to basically maintain where their interest rates are at 0.5. Now, it was widely expected that the Europeans from last week were going to maintain monetary policy. It was widely expected New Zealand was going to maintain monetary policy, and now you have the announcement coming out. And as you can see, you're seeing a little bit of an uptick. It just came out at noon my time. That's 2 p.m. Eastern Standard Time. I saw initial price movement of about 5 points, 6 points, 7 points to the upside here. An initial surge in the S&P 500. On the euro dollar, as you can see, the euro is just skyrocketing here on the upside. Dollar's getting pounded down from 1.10. Huge movement to the upside here. Let's look at the dollar index. Dollar index just getting absolutely just beat up right now as well. So the initial movement, the initial reaction is basically negative to the dollar, positive to the market. Once again, the initial announcement has just been released. We do not know for certain exactly what the Fed did. It is still not out to the public domain. We just see kind of the overall announcement that, or the overall impact on the dollar is a negative, and the impact to the market so far has been profitable, up breaking intraday resistance levels at 2009, up around 2011 right here. This is on a 5-minute chart. If you drop this down into a 1-minute chart, you can kind of see the price price movement very quickly, ticking very fast. Up now off the announcement. Initial surge in volume as well has picked up. Market is up on the day now, showing profitability on the 1 minute chart. Dollar index towards the downside as well. Now, typically speaking, when it comes to the dollar, initially the dollar moving down on the announcement is that they probably maintained monetary policy, which again was widely expected, and that just came out right now. Monetary policy came in as is expected, 0.5%, and you can see the dollar just kind of getting crushed right here so far, with the S&P 500 now just kind of being mitigated. It would not surprise me over the next little bit, whether it was the next 5, 10, 15 minutes, to see price come back down into a normal trading range. We are up 7.5 on the day so far, but if we drop this once again into a 5-minute chart, up around 2013 right now, up 8 points on the day. Dollar down, euro up. This looks like a fairly significant movement, and it is. It's about 70 pips on the euro dollar. Dollar down quite significantly as well. S&P 500 up around 2015 now, as you've seen that. Now, this is the initial movement in what we see. And as you can see, this is how important economics is. This is how important the Fed is. This is why we talk so much about the Fed and economics and economic reports, is, as you can see, all of this price movement here, and then 5 minutes after the Fed, you see on the S&P, all of this price movement right here, and then 5 minutes of the Fed. This is the importance of the central bank and its role in monetary policy. But you have an initial movement in the currency. You have an initial movement in the S&P 500, and then you have that secondary movement. We're only about 3 minutes after the announcement. The only thing we've really kind of seen out there is we've only really kind of seen the overall the only thing we've really kind of seen is the number so far. And right now, the number came in as exactly what was expected, no change in the rate. And now the Fed kind of looks at just 2 more interest rate increases. And that's going to have that impact on that, because we were expecting 4 interest rate increases coming into this year. Now kind of the market is expecting just 2, maybe 3 interest rate increases. And that's going to have that impact on the S&P 500. That's why it responded positively. However, again, this is the initial movement. You do have a secondary movement as well, and that's when Janet Yellen gives her presser and Q&A on the economy, on monetary policy. And what I'm really going to be interested in is how Janet Yellen, how she kind of discusses the differences between the doves and the hawks of the Fed right now. Hawks want to continually raise rates. The doves do not. How they see the economy right now. We did get the CPI report earlier this week, and when you look at the core CPI report, even though that's not the Fed, what the Fed looks at, they look at the PCE report. We did see the inflation came in at its best since 2012. So it's going to be interesting on how Janet Yellen sees the impact on the Fed with Fed monetary policy, with inflation. If inflation does normalize, labor market is where they expected it to be. It has normalized to a certain extent as well. So we got a little bit of a text. The text of the FOMC policy statement is currently out, and global economic and financial developments continue to pose risk. Shocking statement of the day, looking at the world global environment. Inflation is expected to remain low in the near term. That is very normal in comparison in terms of the Fed monetary policy, in part because of earlier declines in energy prices, but to rise to 2% over the medium term as the transitionary effects of declines in energy and import prices dissipate and the labor market strengthens further. So we do have the text out of the Fed, and we'll post that over at Tackle Trading as well. Make sure everybody who watches this video and sees how the impact of the Fed reads the Fed's monetary policy as well. Just to reiterate, let's look at the dollar. The dollar, after 6 minutes in the market, the dollar is down, and it's down from the highs, just down about 0.5%. Crude oil has spiked up, dollar down. That is normal. Crude up, dollar down. S&P 500 initially responded favorably to the announcement of perhaps only 2 more interest rate increases the rest of the year. We are looking at that June date right now is where we're kind of looking at it, is what happens in June of this year, not the next one. And then on the euro dollar spiked up as well. This has been Matt Justice on a video on how the market responded to the Fed. We had big candles, but not a whole lot of price moving outside the euro dollar, which is up 100 pips after the event. Dollar going down a little bit, market going up a little bit as well. This is Matt Justice for Tackle Trading. Hope you enjoyed the video on how the market responds to the central bank monetary policy. Get in the game, one trade at a time, tackletrading.com.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.